Corporate Governance, Key Principles and Best Practices for ACCA SBL Exam Syllabus. Welcome to this video on corporate governance, a crucial aspect of ensuring the integrity and transparency of a company. In this video, we will cover the key principles and best practices outlined in the ACCA SBL exam syllabus, focusing on corporate culture, risk management, audit, disclosure and transparency, shareholder rights, and shareholder responsibilities. Corporate culture. Board oversight. The board is responsible for implementing and maintaining a culture of integrity. Code of ethics and conduct. Companies should develop and apply a code of ethics and conduct across the organization. Training and support. Appropriate training programs and support should be in place to ensure staff understand and apply the code effectively. Bribery and corruption. The board should create and sustain stringent policies to avoid company involvement in bribery and corruption. Employee share dealing. Clear rules should be established regarding trading by directors and employees in the company's securities. Risk management. Risk identification. Boards should adopt a broad approach to risk identification, considering financial, operational, and reputational risks. Risk tolerance. The board should determine the company's risk-bearing capacity and tolerance limits for key risks. Risk management plan. Companies should maintain a documented risk management plan, which the board should approve annually. Disclosure. Companies should disclose sufficient information about their risk management procedures to reassure shareholders. Audit. Audit process. Companies should aspire to robust, independent, and efficient audit processes using external auditors in combination with internal audit functions. Internal audit function. The internal audit function should have a functional reporting line to the audit committee chair. Audit committee. The audit committee should oversee the external auditor, ensure the quality of the audit, and maintain oversight of key auditing decisions. Disclosure and transparency. Disclosure requirements. Companies should ensure transparent and open communication about their aims, challenges, achievements, and failures. Financial and operating results. Disclosure should include financial and operating results, company objectives, risk factors, stakeholder issues, and governance structures. Non-financial information. Companies should report relevant and material non-financial information to enable informed decisions. Shareholder rights. Shareholder participation. Shareholders should have the right to participate in key corporate governance decisions, such as nominating, appointing, and removing directors. Preemption. New issues of shares should be made on a preemptive basis, offering existing shareholders the right to purchase new shares. Shareholder voting. Shareholders should have the right to vote and should be provided with timely and adequate notice of all matters proposed for shareholder vote. Shareholder responsibilities. Long-term value. Institutional shareholders should recognize their responsibility to generate long-term value for their beneficiaries. Governance analysis. Institutional shareholders should engage in governance analysis and dialogue with companies to achieve a common understanding of objectives. Voting policies. Institutional shareholders should publicly disclose their voting policies and practices. Internal governance. Institutional shareholders should ensure proper oversight of their management and manage conflicts of interest. Conclusion. In this video, we have covered the key principles and best practices outlined in the ACCA SBL exam syllabus for corporate governance. These principles include maintaining a culture of integrity, effective risk management, robust audit processes, transparent disclosure, and equitable shareholder rights. Additionally, institutional shareholders have a responsibility to generate long-term value and engage in governance analysis and dialogue with companies. By following these principles, companies can ensure transparency, accountability, and long-term success.